12 2020 S&P 500 market recap on this index. We definitely now are in the yellow zone and an overbought zone, definitely here on the daily testing right up here at 35.48. You can clearly see gap. We come down, but this is where it started. They kept gapping it up every day, every day, every day. So pre-market E-mini S&P 500 futures gap up every morning, then what they were doing was they were gapping these up on top. And we ran too far too fast. And we're within 38 points of the all-time high. And this is in our system that we have, Panther. And the thing about it is, you can clearly see they sold right there, right into that. But look what they did in the rally. And this rally is an upside rally from the sell-off that happened here. And you can see the gaps to get it there. And you don't see where a market goes up, consolidate, breaks out, pulls back, consolidates, and then goes up like that. No, this is upside volatility. And now that we have hit that mark, there is going to be downside volatility. And the equity side gapped up the same amount of days. And it reminds me of when they were doing the tops here, gap up every day, gap up, gap up. Same thing here. Gap up, gap up, gap up. Gap up, comes down, gaps it up, resistance. That is the trend in the S&P 500 right now. Going into a major earnings season, gap after gap. And now we've gotten to a point now in the S&P that I am calling a near-term cautionary yellow flag on this index. And it's ran too far too fast. And there's going to be a lot of volatility. And every single day, with every single gap, it's been talked about and redistributed on the networks constantly, all day long. Stimulus package, woo-wee, this, that, rah, rah, rah. Hey, the bottom line is, this kind of move, gap after gap, is not what you want to see. You want to see where you consolidate, break out, fade back, and have real trading ranges within the S&P 500 index instead of volatility gaps. And this is, now that they've gone this far, then this is going to, and equities hit the highs. And when a lot of your leaders that hit the highs, they drop like a rock off of the highs. And they did. But they too gapped up 4, 5, 6 days in a row in the rally. And now one has to be very cautious because of the amount of volatility. And there was selling today going into the closing bell. And I'm going to conclude that as a top in the S&P with a yellow flag, and that it's not the kind of index that's volatility. And I have seen this too many times. Gap, gap, gap. Well, let me tell you, they're coming back down. And they are. And they have to. And the reason why is because real bull markets don't gap, gap, gap every day. They consolidate, break out, and consolidate and break out. And once again, it's my pleasure to let everyone know what the gap sequences were. And then the call side of the market went up. And when you don't think it's going to go up again, then they gap it up and whatnot. So the whole upside volume with these gaps have been on no volume at all. And there were sellers going into the closing bell, and there was. And I think that the cautionary yellow flag is in full effect as of right now, with big volatility is coming. And just remember, big volatility is coming.